Officially, good morning. Happy Sunday. Welcome out, everyone, to the Market Watch Group. Sunday Market Insights, as I said, my favorite day. Why? This is our chance to just orient ourselves to there's no risk right now. I mean, we still have risk on. If you carried trades through the weekend, you have risk. But not right now. It is what it is. There's no new information, Mark, right? Even the futures shut down until 5 p.m. this evening. They come back on. If you're a junkie, you can pull them up, start watching how they come out. How are they reacting to what's going on? Be honest. How many of you look at the Sunday night futures? I know there's a handful of you that do. And so this gives us a chance to just put it all together, mix it up, see how it tastes. What are we concerned about? What are the triggers? We're not just thinking, oh, what is it now? We're thinking, what is it now? What direction is it going? How fast? And what are the triggers that would make us think it's going to go the same way, stop, or reverse? Like let's really be proactive in our thought process and not wait for something and then be like, oh, what just happened? Now what? Yeah, right? Okay. Happy Sunday indeed, Grayland. So good to see you as always. Never forget, we're here for education, illustrative purposes only. As well as because it's like a best friends club as well as trading group. Some of you didn't know that, but it is. It's okay. We don't give recommendations to buy or sell any security or financial product. We're not brokers. We're not advisors. There you go. What are we going to do today? Market posture. It's if you haven't started doing it yet and you're like, what is this posture all about? It's just 6 components of the market that we break down and look at independently. We analyze them without any extra noise, right? We just isolate the long-term trend. What does it tell us? Trend analysis. I don't care about overbought, oversold. I don't care about volume. I don't care about candles. I care only about trend analysis. My slide's not changing. Uh-oh. Is it now? Okay. Sorry, guys. There it is, the agenda. I'll just assume that you heard the disclaimers fine. We won't go back to look at that. So we're going to look at the posture, one component at a time. No bleed over, right? We don't let the short-term influence the long-term. We don't let the volume influence the short-term. They get analyzed independently. And then we get to see what does the underlying market look like so that we can make better decisions from a broad perspective. How much risk? How many trades? What types of trades? Volatility's high right now. You'll notice we're not doing a lot of buying options. I don't want to buy expensive options, so you'll notice we're doing more spreads. If you're new at options, that makes it harder if you don't know how to do them yet, right? And so what can you do? Well, you can buy deeper in the money. But it's a great way to learn. We'll talk about sectors. We preemptively did some consumer defensive, building it up a little bit, and we built it up because we felt this defensiveness brewing, and it seems like it's continuing. And now all of a sudden, what? Now you've got talks of recession and other things, and yeah, our posture has been pretty spot on, and we had a pretty decisive breakdown last week, which was very influential, although I did take an Apple trade on Friday. Why? Because look, we're gonna have bull rallies, even if it turns into a correction or even if it turns into a bear market. There's always going to be bull rallies, and so I'm looking for things that if this bull rally happens to turn into a V, and we'll get to that in a second. I always tell people, look, it's now or you're going to spectate when it really starts to move, and you'll be like, oh, I wish I would have put something on. So we're at that point. Does that mean I'm going to load up on bullish things? Absolutely not. I don't have enough bullishness to do that, but I still have enough bullishness that I do want to have things in place. Watch list maintenance. We'll get our opportunity list put together. What are the things that look tradable? This might be an interesting week. We might actually turn this into a bullish / bearish list. Yeah? I know a few of you have already started trading bearishly. If you haven't, and you've never traded bearishly because you're new, this is a great time to paper trade. Hopefully you have a platform that allows you to paper trade. And you take advantage of that. But at this point, the posture has dropped to a level, especially I think we're going to drop again down to the ones today. That, yeah, I'm open either way. I will trade bearishly. I will trade bullishly. I would even trade neutrally. So this week, there's a very good chance, if you're what I would consider to be maybe an intermediate to advanced level options trader, that we put out a butterfly spread that would possibly need a second butterfly spread in order to, give us a neutral trade, taking advantage of the higher volatility and positive time decay. All right, let's get to it. Market posture. See, I talked about my platform working, and then it just showed me that. Let me make sure that we're still working. I might have to reset. No, we did. We made it. We made it. Look at IBM, up 5% on Friday. Feels slow. I've only tried puts these last few, Kami said. That makes sense. What have we been? We've been more, negative momentum. We've been more dropping. Our posture is not just about the score, but the direction, right? What direction has it been going? And it was like fighting to hold on in that 4 to 5 range, and then it broke. And when it broke, it's like, yeah, I mean, it makes sense. Any puts that you put on would likely have done well. You can see where we are now. Right now, the stochastics is actually on a little bit of an upswing on the S&P. So the buyers have tried to grab, and they just can't. You can see there it is. They tried here. It was the first time. And then they got overwhelmed. And then they tried again here. Overwhelmed. Tried again here. So in this situation, we're yet to see a second buy day. In 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I mean, theoretically, you could say that, but let's just stay there. In 12 days, 3 have been buy days, and they've never been followed by a second. One buy day, overcome. One buy day, overcome. So, what are we looking for here? Okay, well, like I said, if it's, we came down, we hit the 200. I would definitely expect to see something where, at the very least, I don't know why my drawing is so it moves up eventually and gives us 2 or 3. 1, 2, right? Why is my drawing not working well today? 1, 2, 3. Now, at this situation here, if it starts to roll over and then turn back down, yeah, that's where we're thinking, oh man, this is the double dip. This is where we're likely to head down to this 550 level. What are the dates on my line pairs? Which lines? I'm not sure. Bob Walker, tell me what you mean. Like my moving averages, green, red, blue. So the green is the 50. And then, so this is the 50 here, 100, 200. And then the rest of those are the rest of those are just different variations of our lines that we've drawn in the past. Like, right, so the blue, the green, those are just like back when we had different trend. You'll see that when we go to the one. Let's go to that. Let me just jump to the weekly. But it is interesting that we have had 12 days, only 3 of them buying, none of them 2 in a row. So clearly the buyers are really, really struggling. You can see this chunk of volume that we have. Like there's a battle going on, and so far the sellers are winning. We don't need to go through a market posture scoring process to see that, right? Okay, so let's drop down to the weekly chart. Long term. This is institutional more than anything. I'm not going to make any big decisions based on what I see on a weekly chart. This is institutional for me to understand. If I'm looking through the lens of the institutions, do I see strength? Do I see weakness? Do I see concern? And this week we see concern, right? So if you look now, these hopefully the red, the blue, and the green make sense. So the green was our trend score for a while back here. Very strong trend we had from in this situation. And then from there, it dropped and we moved to blue. Blue is the same angle as green, but just like one tranche lower, if that makes sense. So when it moved, it was in fact, this was I believe this was a consolidation here, or very, very close to it. It was like 9.7% or something, right? And so with that correction, or close to, I just moved the tranche to the blue, and the blue worked for another good while, all the way into the end of the year. So we were riding these long-term trend scores and staying bullish the entire time, as we should, as there were only one consolidation here, one correction here, but that was a long period of bullishness. You should have been making great money bullishly in, right? That's the point. But what's happening now? Ooh, now all of a sudden we broke the blue and we had to reinvigorate red. Red came from a previous angle back here, back when we were waiting for this thing to try to take off. And now you'll notice that even shifting to red, what's happened? We didn't get to the top. So we actually have a same high. I mean, it ever so slightly a higher high, but I would say pretty much a same high, right? It was very close. What was the high back here? 608, 609. And this time we got to 613. So we got 4 points higher. It's not even 1%. And now we broke. Last week we held. If you remember Friday, we had like that little Friday rally on, and it held, and we didn't change our score. And now what's going on? It broke. Not only did it break the trend line, this is my last low. Oh, if it would have broken that, I was gonna knock it 2 quarters. I was gonna knock it a half. But if you remember, I said last week earlier when I said our markers, what are the markers that we're looking at that are gonna cause us to be like, oh, this is better, or oh, this is worse. Last week I said my marker is the red line. If we break the red line, and Friday it held. Okay, we didn't change it. This week it didn't hold. I wasn't even thinking. Quite honestly, I wasn't even thinking about the previous low. But we ought to think about it now, because look at this, right? Look at this. We're right at it. As of now, it's held. I'm not going to score against it. It didn't break that low. It could be testing that low. Definitely broke that line. So what's going to happen to my score? Well, let's go to the posture. Remember that if you haven't, you can download this and have your own. And I need to go update the version of it and then put it back in. But I do have the historical. So you could go back and you could be like, oh, how did you guys score it back when it was this market? What was the score? When it was here? When it was doing this? So that you can be like, does this objectively subjective analysis have merit? Right? And it is. Let's be realistic. We're going to go through this and we're going to score it. It's not like we're applying a filter, and then we can just say, oh, the filter says it's a 3 or a 1 or a, right? We have to look at it. We have to kind of, and that's the point though, is it's having us objectively analyze these core components of the market. That's why we do it. So what happened to my score? It dropped to a minus 0.75. Nope, I'm sorry. That's totally not what it did. To 0.7. It dropped minus 0.25 to a 0.75. If it would have taken out that low, I would have dropped it to a 0.5. Now, you might be thinking, well, wait a second. If it's going sideways, shouldn't that be a 1? This process is oriented to linger bullishly and be bullish because markets tend to be bullish longer and be bullish more frequently. It is so there is a slight bias in that regard, and we acknowledge it, right? We acknowledge that bias. So we're basically saying, yeah, no. When things break, and this is it's even more so with the short term trend. We're not going to like flip and be like, oh, I'm a -2, because it's not realistic relative to how these conditions play over time. So that one you're going to just have to kind of trust me on. But then again, like I said, I would welcome you to go back and be like, you know what? He said to go and look at what happened in July through middle of August, early July through middle of August. What happened to the score? What happened? Like, just go back and look at it. It's just like you would any indicator. You would go back and be like, well, hey, does this thing give me valid signals? Does it turn when it's supposed to turn? Does it caution me when I should be cautious? Right? That's the beauty of our indicator is it has a be water ability, right? We have the ability to adapt. Whereas if it's a formula, it doesn't. And that's where formulas, I think, actually can become a constraint when markets are transitioning. And that's why I think this process holds. So that's my soapbox moment. Let's go to the daily. Tell me how you're scoring it as we go. If you're a scorer, if you're not, or if you have a question, ask it. It's a great question. I'm sure it is. I have no doubt the question on the tip of your tongue is a great one, and I would love to hear it. Whoever you are who has that question. Okay. What were we on? We were on the 3-year weekly chart. And you can see we're not looking all the way back here. We're looking to identify what's important for me to then analyze it. Still learning to score. Love it. Love it. And I hope you've seen the videos, which again, they're going to be helpful, but it's a matter of practice, right? You're like, okay, I get the gist. Now I need to practice. I need to see it, hear it, feel it as it makes a few changes. And if you asked anybody here who scores now and is more comfortable with it, they would say, yeah, that's exactly it. You start doing it and you're like, oh my God, all of a sudden it's a little scary because you're like, oh shit, this is making sense. You're like, this connects. I see the connection. Love it. Okay. Thank you for sharing. I love that. Now we're going to the 6-month daily. And again, what happened back here on the left of this chart? We like to see it. It's given us context. We can reference where it was and what was important. But right now, what's going on? Well, let's go orient what we've seen. So you can see that last week we dropped from a 1.25 to a 1, which is out of 3, so slightly bullish, right? And that was, you might be thinking, wait, well, how is that? Well, because if you look, even going back to right there, right? If that next day did this instead of what it did, you can't argue. That would have been a really nice bullish setup and trade. The market was still good. I mean, it hadn't really started to get beat up by, like, this is what's happened now. But this is what's happened in 1, 2, 3, 4, 5, 6, 7. It's a week and a half. Right? If you look at this back here, if you look at these instances, this market was still holding bullishly just like it had all the times before when we traded it and it held bullishly. Yeah. So, be very, very careful not to like ever get into like a hindsight bias where you're like, oh man, how did I not? Look, you're in it real time, and now we get a chance to take a step back and be like, okay, so what's happened? Well, our posture's dropped. You can see that last week we took 1/4 of a point away. That was it, 1/4 of a point. And so 1, 2, 3, 4, 5. That was right here. And the reason we only took 1/4 of a point because it got this big piece back. So it really was still, I want you to notice this. Let me erase. This was holding. Even though it tested lower, it got back. That support level was holding at that time. So even if the next day here it had turned, I probably would have been like, yeah, giddy up. There's some good bullish trades to put on. But that's not what happened, right? That's why we wait, because it actually looked like that at the start of the day. It was looking bullish to start and then just sort of fell apart. And then it's just like, and now you're like, well, wait a second. Yes, that's where we're at. At this point, this is where we were. We broke that level. Clearly, we broke this low where we hadn't before. I'm going to say we broke. I mean, those lines are terrible. I get it. They're terrible lines. Can I draw a straight line? Okay, here you go. That's that one. And that's that one. So what am I going to do here? I'm not going to be like half a point for this, half a point for the, or quarter. I'm going to say we're going to take 1/4 of a point for this one. And basically 1/4 of a point for this generic one. I'm going to drop my score a half a point. Which means it's now barely holding on to a positive score for me. Some of you may be negative now already. And I get that. That's fine. I'm not going to be like, you shouldn't be negative. I can definitely see why someone would be like, you know what? I'm going negative on this. I'm not going to argue that. What I am saying is there is an absolute distinct chance that if we get a few days of rally from here, and then all of a sudden, let's say Trump's like, you know what, we're not going to do tariffs at all. We're scrapping that plan. We're going to be there. That's going to happen. It's going to be that V, right? And you can't predict that. None of us here are going to be like, I predict that he's going to do that, so therefore I'm going to, right? There's no one predicting a V right now. Could a V happen, though? Yes. You should put that in the realm of possibilities. And the only way that you're going to catch this piece here is if you catch this piece here. Right? That's why I put on the Apple trade. That's why I'm willing to put on another bullish trade early next week if we catch another bullish day, because it might be 3 or 4 days. And if it's only 3 or 4 days, if it goes up like this and then it stalls, okay, I'll take my profits, I'll tighten my stops, and as things roll over, I'm going to be out of those bearish trades, and I'm going to be out of those bullish trades. I don't know if I just said bearish and I didn't mean to. Out of those bullish trades and into some bearish trades where I think, hey, this thing might have that move down. So this is where balance, right? Balance is going to be helpful. The candles that I'm looking at. Tell me if that makes sense, everyone. That why I'm still a 0.5, even though, you know, it's definitely in this zone like this. Because remember that what happens to me is I'm not trying to score that. I'm now just scoring individual events. Kami says it makes sense, which means we're good to move forward. We are good. Okay, Bob, let me draw the lines one more time. So I was connecting not necessarily to candles, but lows. So I was just kind of generically going across those two, and then whoops. So first was up here. This was last week. We held this line, right? When that Friday got all the way back up, we held that line. But then we took that one out, and then we took this one out, and this one out, right? And so you can kind of see we're all the way back at these lows. Yeah, these are back from October. That's where we had to pull a line from, and we're at the 200-day moving average. So clearly this is the biggest that we've had as far as a consolidation, right? We crossed the 5% threshold for a solid consolidation. If we rally up and then we turn and get another 6% move or whatever we have, that's where we hit that 550. That's 10%. That would be a 10% move from here to here. That's a correction. All right. We can see what that looks like. So I want you to notice, what have we visualized here? We visualized a few different potential things. A bullish rebound that could potentially turn into a V. A bullish rebound that could stall and roll over. And that rollover could potentially pull back and double bottom, or that could move on down. There you go. I think I have 4 different possibilities of what might happen here. Let's make it 5. What if it just doesn't do anything for a few days? What if it just sits here on this support level for a few days? What if we sell from here a little further, right? I mean, look, let's let's map it out. But what we're trying to get to is what's most likely to happen. What is the path of least resistance? What's likely to happen based on the fundamentals that we see in this market right now? That's what we're trying to drive to here. Okay, good discussion. Let's talk about volume. So I'm gonna take you. Let's see. You're down to a 0.5 volume. So we started on a 3-year weekly chart that was up here at the top. Then we did a 6-month daily chart. Now we're going to do a. Is that like fib lines? Kind of. The theory's similar. I mean, fib lines are just like, you take the whole Fibonacci sequence, right? Of 1, 2, 3, 5, 8, 13, 21, where you're just adding them, right? And you extend it out, and then you can divide in, and you can get, and that's how they get Fibonacci retracements. But that's the thing about Fibonacci retracements. People are like, oh, they work like magic. Well, yeah, you drew 6 lines. You drew 6 lines below, a couple lines above, and you're like, look, it touched it. And you're like, well, it's 6 lines. Of course it did. Of course it's going to touch one of them. Like, that doesn't make it magic. We drew a bunch of lines too. Look, it's touching all our lines. It's magic. It's not magic. We're just trying to find reference points where we think, that makes sense that it's there. It was there before. Right? Things like that. Yeah, but I do like fibs. I mean, they're fun to play with for sure. And I tell people, this is my only chart that looks like this. This is my SPY chart. This is the market. That's why this one looks like this. If we were to be like, hey, let's go look at that Apple trade. Well, that's a clean. I don't even have anything drawn. I have some moving averages, right? I have some moving averages. That's what I have. So if I want to draw, I'll draw short term. I don't like to have things on there but with SPY. So if you're marking yours and you're marking the SPY, we're here a lot. I love it, Graylin. Yeah. People think that Elliott wave is magic too. It's kind of the same theory, but anyways, let's talk about volume. It's a good discussion today. I feel like we're hopefully connecting a few points for some of you. And if you're new, that this is making sense. What are we doing with volume? You'll notice that now these guys are standing out. You might have been like, what's with all the gray and nonsense on your volume? This is the Miguel volume indicator, where we are marking so they stand out clearly, are above average volume days. You can see these days nobody cares. It was less important. These days, this is where there's a big bunch of action going on. Miguel's not even here today. He didn't even get to hear his indicator referenced. What are we doing then? So we're identifying if it's above average and then who wins. Sellers, sellers, sellers. Nobody. And you can see what happened on that nobody day. Just sort of paused there. Sellers, buyers, sellers. They started with buyers and they completely overwhelmed them. And then sellers again. Buyers, sellers. Now we gave this to the buyers. I gave this to the buyers, but I'll tell you what, it's not that, like, it only went from here, 572.25, to here, 575. I mean, it was only 0.5%, but I gave it to him. It gapped down, sold off, and then recovered, right? So it was a late session recovery. It did get above average volume. The buyers won the day. I gave it to him. Where does that put us? 1, 2, 3, 4, 5, 6, 7 to 3. 7 to 3. Okay. What does that mean? I think I'm going to leave it. If we didn't get this last day and it was 7 to 2, so there's 7 seller days and 3 buy days. 7 to 3. What's the net result for that? It's an imbalance to the sellers. I'm gonna keep mine at a minus 0.5. If this would have been a 2, if that would have happened, I would have gone to a minus 0.75. It was right on the bubble. But I'm gonna leave it as is. Super curious about this one. Where's everybody scoring their volume? What's our sanity check? What is the sanity check? That's where we draw a point at the start of this, a point at the end of this, you'll notice, and then I'm going to connect the dots. And I'm on a pretty negative slope, so this minus 0.5 makes sense. Sanity check prevails. Okay, volume. What do we know about this? This volume is more than half the chart. So next week, it'll be here, and all of this will still be at play. The week after that, this first bit of sellers, we will start to consider stale. And we might be willing to nix it, but that would still leave us with this. However, this is much more equilibrium. I want you to notice that we started here and ended here. It was a downward, but not like it's catastrophic, right? That's not catastrophic in and of itself. And this is 1, 2, 3, 4 to 3. So this is really a 0 for me, right? Tie goes to the buyers. So a slight imbalance to sellers is a tie. So that would actually be a 0 for me. But that's 2 weeks. 2 weeks. If we don't see any chunks for just buyers, if we get this, that'll change things. And that would be like, oh, hey, that would be useful. So like I said, I don't want to just score it. I want to score it, and I want to think about what are the markers that would make this get better or worse, so that during the week we can be like, oh, hey, look, the market's getting better. We said if this happens, we would have assessed that as getting better, and it's happening. Therefore, right? That's easy enough to do. So we're trying to get that in place now so that halfway through the week, if we see a couple of volume days, we're like, hey, whoa, that's enough that this thing might turn. And those are the numbers that we're looking for that will crank us back into bullishness. We want to make sure that we see it quickly. If you miss early transitions back to bullishness, you miss some really nice pieces of market action. Right? So, okay. Questions about volume? Steven said minus 0.5 is good. All right, let's go. Major market. Major market. Let's make sure that My analysis is all the way over. It is. What do we see happening here? Well, what we have been seeing, let's orient ourselves around our current situation. Major market is neutral, flat. It is straight up a zero. It's dropped steadily. That was one of the first things to go back, if you remember, December 15th to the 22nd. That was when we first got a real hard knock on the market. That was one of the first things to go and has just been on a steady decline since. Right? What is the major market looking at? It's looking at the fact that the Dow is holding up better. Look at where the Nasdaq. We used to be thinking about the battle for third, where the Russell and the Dow are like, who's going to win the third place race? It's not even a thought process anymore, right? We know for a fact that small caps are completely, whatever excitement we saw post-election for small caps, right? You can see right through here, they were trying to break out. Look at those blue lines trying to break out. Thinking, hey, but, the Fed is basically like, everything about, I don't know if you guys saw that or not, but they're like, everything about interest rate policy depends on Trump. Essentially saying if he puts in tariffs, interest rates will not come down. You can't. You can't bring interest rates down when you have a known inflationary mechanism in place. They're just not going to do it, right? That's essentially what they came out and said. That construct of interest rates not in a position to come down, it's not good for small caps. If there's any hope, if all of a sudden we're like, oh, the Fed's looking great for being dovish and accommodating, small caps will absolutely rally on that news. This tells you where that news from a probability standpoint is. Small caps are out of favor, period, right? There's nothing to think about there. The next question then is, is technology holding up, or are we starting to see some defensiveness start to move into the market? So the Dow has not rallied per se, but I want you to notice we see this. That's the Nasdaq. That's the Russell. That's the Dow. You see it, right? We all see it. Even the S&P. There's the S&P. What are we noticing here? The Dow is the least responsive. So we're already kind of sensing money coming in there. It's not leaving. It's leaving other areas, and it's not leaving the defensive areas. And we're looking to see if it's going to start coming back in. So it's like that defensiveness is just kind of, it's subtle, right? But again, I hope you notice, like, it's, to some extent, you want a process like this that's subtle, that you have to learn, because if it was easy, if you could just like take a peek, then it's not that valuable. Am I right? It's like, if everybody's doing it, it's not very valuable. We want to see things that aren't seen other areas earlier, as early as we can. That's the goal. Drop it to 133. What are we noticing? There's the Russell just completely gone. Everybody's kind of in the same place. But who's sort of eased to the top of this little conglomerate here? The Dow. Okay, we're seeing it. We go to 66 days. Oh, man. There it is again. I'm a zero. This looks like a zero. Everybody's just lockstep. What's my trigger then? Let me change my color. Change to green. Okay. Let's say that all of a sudden, I don't know why it like flips like that. I'm not doing that, I promise. Let's say green takes that shoot up on this time frame. That's the trigger for us to take this to a negative. Right now I'm a neutral. I'm a zero. I don't see all the favor of the Nasdaq holding up. It's always holding up ahead of everybody. That's gone. Look where it is. It's not holding up. It's dropped. Oh, we'll check the 20, Bob Roland. You know we will. Now, here's the deal. I'm not really in a situation where I'm like, if the green was slightly ahead and I was like, I might move this to negative. And then I check the 22 and the 22 shows the Dow just like ahead of everybody else. Then I'd be like, oh yeah, yep, boom, take it down. But I feel like this still is representative of what we have. What we have is a neutral. Every neutral meaning it's just sort of everyone's down there tied. If pink shoots up, I'll start to go back positive again. If green shoots up, I'll start to go back. If red shoots up, I'll start to go positive again. That's NASDAQ. And if green shoots up, I'll start to go negative. That's how I see it. But let's do as Bob asks. 22. Ooh, look at that. You can see the market is still there with the Dow. So it's not defensive enough that it's surging beyond the S&P. But definitely, money's flowing out of the small caps at a faster rate, flowing out of the NASDAQ at a faster rate. If I was on the fence, I would probably knock it, but I'm not. I'm going to keep mine at a 0. Let me know where you stand. 0 is a good score. We're already in the ones. We dropped this and dropped this by 2. Yeah. Let's go see if sectors hold up. Steven went negative. Oh, okay. Because the Dow is the chief marker for defensiveness. Correct. That's that safe haven, right? And not always. That we've had times where we saw the Dow move and we're like, yeah, it moved, but it just sort of moved like everything else. When we see it move on its own. God, I thought I was going fast today, but I'm not. Okay, sorry guys. Let me hurry up. Okay. Sector rotation. We still have comm services. We still have financials. And we still have discretionary. Then it drops off. You can see, staples are starting to move up. Industrials have moved down. Overall, this is still fine. But one thing we notice is all this drop off. We know we're going to find some shifting as we move into these lower time frames. Right? So we go down to 133. What do I have here? Comm services still there. Discretionary. Financials. Those 3. We know that industrials and technology have really kind of fallen off. These have held up to some extent. When we drop down to 66, though, it's all over the place. Comm services still there. And then healthcare popped up. And then you've got staples moving into a leading position. So here it's like, this looks much more oriented. So this is the first time, and we still have comm services. I don't know. I kind of feel like I'm on the fence. I'm on the fence to drop it or not. I'm thinking of taking that 1/4 point and taking it to neutral. Because right now on this time frame, now this is the first time we've seen it. So I want to hear what you guys are thinking. But all of a sudden, I only have comm services. Healthcare is kind of a hybrid. And now I have this. So I feel like that's neutral more than bullish. So I'm kind of like, I'm on the fence. I'm willing to take it down. You can see financials dropped off hard. Technology is just down here in the dregs. As is industrials, right? There's nothing good in there. I'm going to go to the 22. Let's see if the 22 can bring me clarity. The top of the 22 is staples, defensive. Second place is healthcare, hybrid, but it's got some defensiveness. Utilities. Materials. Who's at the bottom? Discretionary. The worst. Technology. Second worst. Financials. Right? That's not great. If that's the tiebreaker, which it is, I am dropping mine to a 0. Where's everybody else at? Where are you at? Let's get to the VIX and let's get to the watch list, and then we'll talk about Section 8 last week of our trading plan loop, and then we start over next week. So if you're new, we're starting over on Section 1, all as a group, next week. This week, we're going to be working on Section 8, setting goals. Even if you don't have any other information, never a bad time to set a goal. Kami went to a 0 as well. Okay, let's go to the VIX. I mean, you can see it's a mirror image. The S&P, let me draw it. I'm going to go back to the S&P for 1 second. Okay, so here to here, we just sort of came right down through there. Okay, now I go to the VIX, and what's the VIX going to show me? A mirror image, yeah? It was here, and it just kind of went right into the middle there, and there we are. All right. So obviously those things tend to work lockstep. Let's mark the last 5 days. 1, 2, 3, 4, 5. This is where we had last marked. When we last marked, what happened? We actually kept the score the same. We did not drop it because it held this high right here, right? Like we tested above it, but we kind of held that high. I believe was our logic. Clearly we have it now, right? So yeah, I'm not taking a half a point like I did on the short term. This only did one thing. It took out that high. That's it. Yeah. It held at this one. So for me, I am going to take a quarter of a point. Where are you? Still a 0.5. So what happened? We dropped on the long term, half a point on the short term. Volume stayed the same. Major market stayed the same. Sector rotation dropped a quarter of a point. And volatility dropped a quarter of a point. Yeah, that was another hard week, you guys. So whatever we kind of thought we might see holding into the 4s and 5s, it didn't happen. We broke down. To me, that increases the likelihood of a correction. I'm still gonna, put on a trade or two bullishly to the upside if I have it, because like I said, if the news comes out positive, we could see a V. We know it. I don't want to be on the sidelines for that. But I'm definitely starting to orient more towards bearish positions, obviously, right? We are now in a neutral. This was barely maintaining some bullishness. 2.5, still holding on to a slight measure of bullishness. But I want you to notice what's happened is we've had that drop again. We've dropped from 475, so it's been pretty nasty, and without any insight to a catalyst. And if someone wants to point one out, I'm open to it. Let's go take a quick peek at that. What do we have on the docket? Free falling, 'cause I'm free. Big Tom Petty fan. Monday, nothing. Tuesday, job openings. We I don't know why they got moved to that Tuesday instead of the other Tuesday, but they did. Nobody really cares. I think this is like a small business optimism index. Nobody cares about that. Job openings, maybe. Big focus here on the CPI. It's expected, right? And I don't know when these expectations came, but if they're expecting it to drop 5.3 to 0.5 to 0.3 and it ticks up, yeah, that could be nasty to the market, right? All of that. Wednesday CPI, Thursday PPI, Friday. This is a minor consumer sentiment report, but it does show. Looks like it's dropping a little bit. I don't know. I don't think the catalyst is in the economic data. I think we all agree the catalyst is coming from the executive branch of our politics. Okay. Catalyst is fear. Yeah. Yes. Last time we were lower on this score was October 2023. What was going on then? Correction. That's the last time we had a correction. Great flag on that one, Bob Walker. Great flag. Let me show you real quickly what was going on there. Time frame. Let's go 2 years. Let's go back to the SPY. Okay, I'm going to take a few extra of your minutes. I just want to run through the trading plan outline and the watch list. If you want to bounce, you can. You can see on the summary, I'll give you the focus list for this week. This is what he was talking about back in here. We dropped and then we tried to recover. If you go back and look in August, we actually, our score dropped and then it recovered a little and then we had this double dip in here. So October was in this area and you'll notice what happened after October. We had that last smash down into November. Late October, right? We had that last one. So there's that dip, rally, dip. Right? You can kind of see. This one was a little steeper. This one took a little longer, little rally up. That's why I'm kind of thinking we might be seeing something. Yeah. Thank you for pointing that out. I appreciate that, Bob. Trading plan. Oh, geez. Where are you, trading plan? Hold on. Let me grab it. Where are you, trading plan outline? Boarding docs. Okay. And remember that there is a fully fleshed out version of this. If you're like, man, I don't know how to start. Yeah, I get it. Go take a look at the version that's already done. We've already done sections 1, 2, 3, 4, 5, 6, 7. We are on 8. This is a trading plan loop. We go around and around and around. As soon as we're done with 8, we're going to start back on section 1. So if you just joined us here in the last few weeks, perfect time. Go download your trading plan. Start here, though. Improvement strategies, goals, outcome, only one. I want to make 50% return. I want to, whatever it is, you can have one of those. This is about process goals, which is focusing on improving your trading process. You should have a spreadsheet where you keep records of your goals. You should follow a goal setting process using a SMART, right? Specific, measurable, achievable, set a timeline, define steps, monitor frequency. What are we focusing on? Weaknesses from section 1. That's why your trading plan is so important. Because in section 1, you were like, hey, you know what? I don't like that I do this or think this or am this. Great. Make a goal to try to take that out. Trading priorities are going to come from what? Well, that might come from weaknesses you've identified in your trading plan. Or you might set goals based on analytics. So we just talked about record keeping, and we talked about analytics. And within that construct, you should be thinking about average wins, average losses, reward to risk, frequencies. All of those give you opportunities to try to set goals that you are having a deliberate impact on your trading. You're saying, if I do X, then Y should happen. And you do X, and then you watch. And if Y doesn't happen, what did happen? And then, right in these observations, this is the last 15 to 20%. I tell people I can get you 80 to 85. That's I can get you to that point, and then that's it. You got to just, right? You know, it's like the Sherpas can only get so far, and then we all got to just make that last bit together. It's the observations, it's the record keeping, it's the connections of market to your psychology, to your tendencies to, and if you don't make those connections, you won't get that last 15 to 20%. If you don't have record keeping, you won't get that last 15 to 20%. You'll spin your wheels, eventually get to where you're frustrated, and then like a lot of hobbies, you'll find a new hobby. I would like to see this become a business where the grit pushes you through and you consistently are finding ways to improve yourself and adapt to market conditions. Bam! Soapbox. Okay, let's do the watch list. We're gonna go fast today. Let me get a note card ready. I felt like that was a good soapbox though. If I had to assess my soapbox moments, I'd give that an 8.2. 8.2. I mean, wasn't astounding. Excellent. Thank you. Bob might give it an 8.6. Apple. I took it. Graylin says A5. Thank you, Graylin. Oh, she's the best. Apple. Thank you, Kevin. I liked it. So I feel like if I'm going to take a bullish trade, I'm going to take a leader, right? If NASDAQ is going to, if the NASDAQ's going to rally, if the NASDAQ's going to move back into a leadership position, Apple. It's Apple. Apple's going to take you there to the promised land. I liked it. I took it. I didn't have a Heiken Ashi yet, but if I get one, I'm going to definitely tighten my stop up underneath, probably here, and then start to do a trail. We'll see what it looks like. So I liked it. I took it. I think it's still valid. Let me know your thoughts if you took it, if you liked it, or if you were like, I don't think so, Scott. AEE. I thought AEE was actually close. That's another one that I think could be an opportunity. I would have wanted it to have closed above 98.48, and it did right at the end. Like it pinched on the stochastic. This was right there. So I feel like this one could be a go. Amazon, negative. Still in its consolidation range. There's nothing there for us. It's got to do this before we have any interest in what's going on there. And we can see what's happened. Consumer discretionary. It's fallen off. Can't do anything without Amazon. Baba. Double topping, kind of slowing down a little bit there. I got to tell you, as we start to think more bearishly, I'm thinking, where are there profits to be taken? Where are there big profits that people might be snatching some shark frenzy profits and that thing's going to drop? So is BABA something I might be thinking to the downside as discretionary has moved? And right, like, yeah, I know they've got some favorability from news with the Chinese government, right? Is that what it was? I can't remember now. I don't pay enough attention. But if this thing breaks down, I might be thinking about the other way. Bank of America, false breakout. It's back in its consolidation range. This is why our penance process requires a higher low. It can't just break back down, or it's still excommunicado, right? No good. BX, nope. Caterpillar, maybe. And that would be nice to see. Right? If this thing gets up into this range and then pulls back, I would definitely try to trade a leader like Caterpillar, trying to get industrials back into the game. That would be helpful. No. Consolidating. No. Consolidating. CME. Yeah. Got to be thinking about it, right? A little bit of a flag / pennant type pattern. We move out of this. That would be one I would be thinking about. That's a leader doing pretty well. Cisco, I would still be thinking about. I felt like there was more potential, though. I kind of was like, I don't know. Is there enough meat on the bones for this thing now? If you're a Cisco fan, tell me. I'm feeling doubt that popping out of this little extended consolidation, there's enough. But maybe it's like a spring and it's ready to pop. Maybe it's ready to give us up to 70. I don't know. I'm thinking about Cisco. I like that it's maintained its strength. In Cisco, Bob Rowland, love it. Up in CME, Bob Walker. Kami's worried about the meat on the bone. That was my concern. If you going off the line I have drawn, I'm going to have to agree and be like, no. We would have to think there was like an extra like breakout potential. Oh, okay, hold on a second here. Got it. All right. The Dow, we don't care. Duke, utilities. The stochastics turned. This turned. Did anyone pull the trigger? Let me know. There's some viability there in utilities being defensive. Fastenal. Okay, that's the second one. What are we noticing about industrials? Caterpillar broke. Fastenal broke. I like to see that. We have to see confirmation on the next seller cycle. FHN is a no. FI maybe. It's near the 50. Flex, no. Fox is in position. Communication services still looks okay. If this thing turns, we've already got a turn on the stochastics, but I'd like to see this maybe cross 56.15 or so. It's very close. I could see this alerting on Monday. I like this one a lot. Let me know if you agree. GE Vernova, no. Gold, I feel like there's maybe the defensive aspect of this against inflation has dropped. Google, no. Goldman, no. Hood, I'll be done in 3 minutes. I know people are starting to drop. I apologize. 3 minutes, I'll be done. No, I feel like it's consolidating. There's only a few that I'm still looking at that I think could lead us. Howmet, maybe. IBIT, bearish. We're in it. That's a nice looking bear. It's starting to confirm. It's starting to move the way we want it to. IBM, we were a little iffy on that. ICE, the Intercontinental Exchange. Ooh. Yeah. Bob Rowland, so good to throw. Always bringing something. I'm putting it on the list. Better than NASDAQ. We'll see NDAQ here in a second. I agree with that. I'm a little iffy on financials, but I don't know. I kind of feel like exchanges straddle like communication services and financials to some extent. I don't know. I like it. I thank you for the contribution. KMB turned around. Coca-Cola turned around. That's bullish right there. I might look at if I could take a Heikin-Ashi and get it under 71.50 or 72, there may be something there. Coca-Cola. You can see it's in kind of a cup and handle. And I feel like if we break this, there's a good chance we might head on towards 80. Coca-Cola is definitely one I'm looking at quite favorably. Let me know your thoughts. Kroger kind of did an earnings bounce. Not much we could do with that. MasterCard is maybe setting up, as is maybe Visa. So those are another couple of components of financials that I'm still interested in. We know people are using credit like crazy right now. Meta, no. Morgan, no. Microsoft, no. NDAQ, as I said, as an exchange, not looking as good. Thanks, Graylin. Good to see you. I know people are starting to lose time. I get it. Thanks for staying as long as you did. I'll be done here almost. NI, I like. That's another one that's in a setup position. And I totally forgot to write these down as I was going through them. I'll go through them again. Don't worry. I'll post it. PLTR, no. PM, maybe. That's a defender. PRMB is still a maybe for me. I still like PM and KO. Those are my two defensives that I like the best. PM, KO. I'm writing them down now. Roblox. No. Reddit. The rest of this needs to show recovery. We cannot compromise. Steven, you wrote it? Okay, thank you. SE, I still like that setting up. That looks nice. Give me strength and I'll still trade it. SPY, we know what we think there. TAL, kind of turned. Now it's stalled. I'm not going to do the sectors today, so we'll end at Walmart. Let me see. TPR, we stopped out of that. It was looking great, and then it just fell apart like everything else. Tesla's down. TSM is a no for me. Twilio is a no for me. Visa is a yes for me. I like Visa a little better than MasterCard right now. And Walmart. Walmart's off the table. It was on, but it's off. So there you go. All right, that's it for me. Love it. Great day. I mean, look, we're in a good place because we have at least buy-in. Everyone, our alignment here. Check TD. TD, of course I will. TD. Toronto Dominion. Oh, okay. It's not bad. I like that one. We've got an okay list. My thoughts are this. If I'm going to do anything, it would be another bullish trade, and then I'll be done with bullish trades. I'm thinking also about maybe a neutral trade. I want bearish, but I want to see a rally before I'm looking to do something bearish. That's my story, and I'm sticking to it. How's the new puppy? Oh, my God. She is enormous. Like, she is... So, Loki is the South African boy. He's about 138 pounds right now. She is on track to be bigger than him. It's like she can't be. But she's going to be at least 110 to 120. She is a fierce thing. Good to see everyone. Have a great rest of your Sunday, everybody. I'll see you in the morning to translate this thing into market action. Let's be ready to take some trades. See you. Happy trading.
Recording.